All right, folks, welcome to today's free online event where I'm going to be sharing some invaluable insights with you on how to retire with 25 to 40% more wealth without taking on more risk or investing more capital. Okay, so let's start off. Right, I need to obviously make a bit of a disclaimer here. Obviously, all the information and resources that are provided in this presentation are for informational purposes. Okay, they should not be construed as financial advice. All investing and financial opinions that I express are from my own personal research and my own personal experiences, right? And so they're intended for educational purposes. It's very important that you do your own research before making any investments, based obviously on your own personal circumstance. Okay. So if you're sitting here thinking, am I in the right place? Is this the right training for me? Am I going to get value? Let me start off by telling you who this is for, right? It's for anyone who's utilizing the services of a financial advisor. Okay, so if you're currently using a financial advisor, you're in the right place. This presentation is perfectly suited for you. It's for anyone wanting to empower themselves to manage their own money. And it's for anyone who's really serious about financial independence and achieving it, right? Anyone who's really serious about improving their life, improving their financial situation, this presentation is certainly for you. Who's this presentation not for? Well, it's essentially not for anyone who doesn't really want to take accountability for their financial future, right? If you'd rather just simply outsource it to someone else, never have to worry about it, then this is probably not for you, okay? By the end of this presentation, you're going to understand exactly what you need to do to retire with 25 to 40% more wealth. And you're going to know the necessary shifts that you need to make to increase your likelihood of being in the 5% of people who retire financially independent. Okay. Now, I want you to ask yourselves these questions, right? Do any of these statements that I'm about to make here, do these apply to me? Are these problems that I feel like I'm having at this current point in time, right? So do you feel that you don't really know much about investments, right? So you give your money to a financial advisor to manage it for you. Is that you, right? You'd like to retire at 55 or 60 or 65, but you don't really know how much money you need invested in order to do that, okay? Maybe you feel that your portfolio is underperforming, right? So you might be managing it yourself, someone else might be managing it for you, but you're not satisfied with the returns that you're getting and you don't really know what to do about it, okay? You're putting money away every month and you're simply hoping that one day it's going to be enough, right? You're not quite sure, you don't know whether or not it's, you're putting away enough money and you're simply hoping that one day it is going to be enough, okay? I want to let you know that none of these are the real problem, okay? These are simply symptoms of the problem, all right? And I think the bigger question we need to ask ourselves is, why do only 5% of people become financially independent? That's 1 in 20 people. That's crazy. In other words, 95% of people reach retirement without enough money, okay? And I want to share with you the reasons why people retire poor. Okay, the first one is that they don't know what their financial independence number is. Okay, so for those of you that are logged in here today, the good news is you're going to learn how to calculate that financial independence number right here today. Okay, they don't make their financial goals a non-negotiable. Okay, so it's just, they're something they'll worry about later. Next year we'll start investing, or when we've got some spare cash, we'll look at it. Okay. People that retire poor tend to not prioritize their financial goals, right? They don't rigidly apply savings rate for their investments, all right? So what I mean by this is a fixed percentage that comes out of their after-tax income every single month, all right? So this savings rate is a percentage of their income that gets automatically invested in their portfolio every month, okay? They have a scarcity mindset, okay? This is a big problem. Mindset is so key. It becomes like your reality regulator. And if you're perpetuating a mindset of scarcity, that's what you're going to attract into your world. Okay. They don't take accountability for their financial situation. This is probably the biggest one. right? If you go around and you ask people, whether or not they're looking after their financial future, whether they are taking charge and taking accountability, the majority of people are not, right? They simply rely on someone else to do it, okay? They don't have an investing strategy and a framework that they follow. Now, this is key to helping you navigate uncertain times. It's a key to helping you base your financial decisions on. And a lot of people are just reacting to the market. They don't have a clear strategy that they follow. And then finally, they're not investing in their financial education. All right. Now, this is incredibly important. If we want to become better investors, we've got to be investing in our financial education. It's absolutely key. Okay, so for those of you who don't know who I am, my name is Dean McCluckie. That's a picture of myself and my beautiful fiance skiing in Austria, where we're meant to be getting married in Austria next year, March, but unfortunately had to push that out another 10 months due to coronavirus. But anyway, I'm an entrepreneur, I'm an investor, and I really am passionate about financial education. I'm the founder of the Euphoric Group, which consists of Euphoric Wealth, which is our financial education company, where we really help clients create and manage their own diversified portfolios. And we provide them with the necessary tools and frameworks that they're empowered to do that themselves. Okay, we've got Euphoric Capital, which is our Section 12J venture capital company, right? It's a tax incentive venture capital company where investors are able to write off 100% of their investments against their taxable income in the year that they invest. And we help our investors generate a 16 to 20% internal rate of return with the underlying security of property. Okay. And then finally, you've got our leisure and hospitality company called Euphoric Leisure. This is essentially an online booking platform that integrates with Airbnb and Booking.com and Expedia. So anyone renting out properties on a short-term basis can apply to list their properties on our platform. And we've also got a really cool, innovative travel membership that is saving our members 50% on their local and international travel. Okay. But ultimately, what my goal is, my big, hairy, audacious goal, is to help 1 million people become financially independent. Okay. So I think in order for us to make the shifts, we need to be able to identify these old ways of investing. Okay. Now, some of the characteristics of what I call the old way of investing is where you simply rely on a financial advisor to take care of your money. Okay, you don't take any interest in it. You just basically hand it over to them, and you maybe meet with them once a year to see how things are going. All right. You don't really take the time to enhance your financial knowledge because you've got someone else worrying about it for you. It's someone else's responsibility. It's not your responsibility. Okay. You invest money each month, and you hope that it's enough to reach financial independence one day. Like you hope you're going to get to that point, but you're actually really not sure, and you really haven't done the forecast on whether or not you're on track. And then probably the most critical thing is that you tend to pay an average of 2 to 3% a year in investment-related fees. Now, for most people, this looks like a really negligible number, like 2 or 3%. I mean, that's negligible, right? And I'm going to show you the erosive effect of those fees on your portfolio over your lifetime. Okay. So in contrast, we want to look at a new way of investing. Okay. And I like to call this the euphoric way of investing, right? Simply because if you go and Google the word euphoric, okay, you're going to get a definition that says a feeling of intense excitement and happiness. Okay. So we want to create a bunch of investors that are constantly experiencing feelings of intense excitement and happiness. And we do that by turning them into euphoric investors. Now, basically, a euphoric investor is someone who builds a diversified portfolio. They don't have to be a financial expert to do this, right? They just have to follow a framework. And this framework requires less than 4 hours of their time a year that helps them build to work, okay? Would you all agree that that's a pretty exciting opportunity if we all could have if we could all create that for ourselves? I'm sure we would all experience a feeling of intense excitement and happiness, right? Okay, so the 3 shifts that you need to make in order to become a euphoric investor, right? The first shift is that you've got to control the controllables, okay? Now, when we talk about controlling the controllables, the first thing we need to do is actually go look at the reasons why people retire poor. right? Now, if you go through each of these reasons, you're going to see that all of these are within your control, okay? Not a single one of these things is beyond an investor's control. You can control your financial, like calculating your financial independence number. You can control your financial goals, your savings rate, your mindset. You can take accountability. You can apply an investing strategy and a framework, and you can invest in financial education. These are all within your control, right? So if these are all within your control, then whether or not you retire poor one day is also within your control, okay? So basically, what we need to understand is that no one will care more for your money than you, right? Maybe your kids, if they're lining up, an inheritance or something, they might care a little bit more than you. But for the most part, no one will care more for your money than you. So take accountability for your wealth, right? Take accountability for your wealth, because no one is going to be able to, no one else is going to feel the impact of good or bad financial decisions more than you and your family, okay? So I said earlier that the biggest problem with the old way of investing is the 2 to 3% fees that typically come with that. And I want to just show you the impact of an additional 2% in fees on your portfolio over a 30-year period. Okay, so we've got two scenarios. The first scenario is indicative of an actively managed portfolio with a financial advisor and the inherent returns that you can expect there. Whereas the second scenario is one of a passive investor who manages their own portfolio and has managed to reduce their fees down to only 0.5%. Okay, so as you can see, the other variables are all the same. So we're assuming a return on investment before fees of 10.5%. After fees, scenario 1, you get 8%, and scenario 2, you get 10%. So it's basically just a 2% difference on average year on year. 10,000 Rand per month contributed with a 6% annual escalation. As you can see in scenario 1, you're looking at a portfolio of 27 million Rand after 30 years. Whereas scenario 2, you're looking at a portfolio of almost 37 million Rand. Okay, that's a 36% difference in value. Okay, and this has just been affected by a 2% fee. And this is why it's so important for each and every one of us to become an investor, right? To take ownership and take accountability for this. Now, some of you might be sitting there thinking, yeah, but Dean, I don't really know much about investments. How do I know which investments to choose? What do I do? And I want to let you in a little secret about what really is driving the performance of investors' portfolios. Over 90% of what is driving the performance of someone's portfolio is their asset class allocation. It's not actually the underlying investment. Okay. In other words, let me maybe start by defining the asset class for those of you that are unfamiliar with the term. An asset class essentially is a grouping of assets that exhibit the same types of characteristics and are governed by the same sorts of laws. So, for example, you've got equities, right? Listed shares. That's an asset class. You've got bonds, which are like debt instruments. That's another asset class. You've and cash, right? That's its own asset class. And then you've got alternatives. Now, some people like to separate real estate out of the alternatives asset class and make it its own asset class. So then you've got real estate and you've got alternatives, which essentially are any investment that doesn't fall into those other categories, right? So alternatives, you could have like private lending, private equity, cryptocurrencies, fine art, or anything that falls outside of those other asset classes would be considered an alternative. Now, basically what this statement is saying is that it's not important whether you own Facebook or Tesla or Amazon shares, but rather that you own equities as an asset class. And you can do this by investing in low-cost index funds, okay? So for those of you who are not familiar with that, if you go and look for ETFs, exchange-traded funds, low-cost passive index funds, these are funds like the S&P 500. Okay, this is a very, very popular low-cost index fund that is probably the most popular index fund in the world. And essentially, you can invest in the S&P 500 and you can own 500 of the largest shares on the US stock market. Okay, you could invest in the JSE Top 40. It's also an index fund. Now, each of these index funds is going to provide you with exposure to the asset class that you're wanting, right? In that case, it's equities. You might look for a bond ETF, like the Ashburton World Government Bond ETF, okay? So you can look for different ETFs that provide you with exposure to the asset class without having to actually go and understand and evaluate the underlying companies. You don't need to go and invest in individual shares. Okay, you can buy a low-cost ETF and dramatically reduce the cost of investing. Okay, so the two big takeaways here, if you want to write them down, is you want to be investing in low-cost index funds, right? And you want to be diversifying across asset classes, right? So you want to have exposure to equities, you want to have exposure to bonds, you want to have exposure to real estate and alternatives and cash, and you just want to maybe weight them from a percentage perspective differently depending on which asset class you prefer, okay, and what the macroeconomic situation is, all right? So now that we've taken accountability, we understand the importance of having to manage our own portfolio, reduce our costs, because if we go back to that example and say, well, look, am I willing to sacrifice 10 million Rand in 30 years to have someone else manage this for me? And if it's only going to take me 4 hours a year, over 30 years, that's 120 hours. If you work out 10 million Rand, for 120 hours worth of work, it's 83,000 Rand, just over 83,000 Rand an hour. So unless you're making over 83,000 Rand an hour, it's more beneficial for you to do it, okay? And going through that process is going to provide you with the necessary skills, and it's going to make you a better investor, okay? So now that we've decided, we've agreed that that is what needs to be done, made that decision, right? You've got to then pay yourself first, okay? So for those of you that are sitting there thinking, I'm not a business owner, I work for a company, the company pays me, I'm going to pay myself first. I want you to think of this as paying your future self first, okay? And this is where euphoric investors understand that it's important to pay themselves first, because what they do is they commit to a savings rate. Now, this is essentially simply a percentage of their after-tax income that automatically gets invested in their portfolio every single month, okay? Now, this is something that a lot of people don't necessarily prioritize, or you hear the saying like, I don't have enough money, I don't really have disposable income to invest. And people just say, well, invest what you can, just invest 5% or 10%. The problem with that is that you never really get back on track. It's very, very easy to slip into 5 or 10 years later, and you're only still investing 5% of what you earn. And if you actually have to run the forecast, and you actually have to go and see whether or not that those monthly contributions are going to get you to your financial independence number, most of the time, if you're not investing at least 20% of your after-tax income, you're not going to get there, okay? So I want to encourage those of you that are looking at this number thinking, whoa, I'm not remotely close to that number, okay? And if you're feeling a little bit overwhelmed by it and you think, I don't know if I can find a way to invest 20%, you can, right? And if you need a tool, there's a great app called 22/7 that you can download. And basically it allows you to put in your bank details, your logins. I know it's quite scary to do that, but it provides you, I think the logins and stuff are encrypted. And then what happens is that they can pull through all your bank statements, your line by line transactions for your bank account and your credit card. And you can then start allocating what you're spending your money on. And it's going to give you great insight into where your money is going, right? And I think that once you start seeing how you're spending your money, you'll be able to identify ways that you can actually save a bit more and invest more. Okay, this has got to be a compulsory thing. Like, this is a non-negotiable. If you're really serious about financial independence, you've got to start, and you've got to start soon. Okay, you don't want to delay it, and I'm going to show you why you don't want to do that. Okay, and it's an example I call the 59 million Rand difference, right? And this is basically a scenario, just an example of two different investors. One starts investing at 25, the other one starts investing at 35. They both invest the exact same amount of capital over a 30-year period, okay, or a 40-year period, but one starts 10 years earlier, right? They both escalate their investments by 6% a year. They get an average return of 10% per annum. But I want you to look at the difference in their portfolio value. Bear in mind, they're investing the same amount of capital. One just invests 10 years earlier and stops investing 10 years before their retirement age of 65. While the other one obviously invests all the way to 65. Okay, so we've got Polano and Lauren. Okay, they both invest the same amount. Polano stops at 55 because he started 10 years earlier. Lauren invests all the way until 65. But the difference between their portfolios is almost 59 million rand. Okay, 59 million rand difference by just in starting to invest 10 years earlier. Okay, and I know that a lot of you have seen these types of examples. You've seen the impact of compound interest and compound returns, right? And I know that some of you are thinking, that can't be right. You know, are those calculations really right? They are correct, right? So I know you're probably then sitting thinking, you know, I wish I'd started investing when I was 18, 19. Like, why am I now sitting in my 30s or my 40s and I haven't really gotten into this, all right? There's a brilliant Chinese proverb that says, the best time to plant a tree was 20 years ago, right? The second best time is now. And this is so applicable to us in investing. Like, yes, in hindsight, we all would have started investing. The first time we received any money, you know, we would have taken a portion of that and invested it, okay? And this is a really, really good wealth mindset principle that we need to start ingraining into our kids, start ingraining into young children, young people, to start understanding this. Because imagine you started when you were in your teenage years, right? And imagine by the time you get to 30, you've already had 10 years worth of compounding effect on your portfolio. That means that you're just 10 years and often sometimes 20 years ahead of the rest, okay? So what happens if you don't make the shift, all right? What happens if you say, you know what, actually, that sounds like a bit of work and, you know, it's just easier the way that I'm doing it now, so I'm just gonna rather do what I'm doing now, right? So cool, you can leave your financial independence in the hands of someone else, right? And simply hope that they'll act in your best interest and not theirs, okay? So just hope that, you know, that broker is gonna be acting in your best interest and not moving your money around and incurring more commissions and more costs, you know, in order to make more money for themselves, right? Now obviously there are a lot of very, very ethical brokers and financial advisors out there, but this sort of thing happens, okay? So by choosing not to make the shift, unfortunately, you are at risk of having that happen to you, right? And ultimately, you're going to spend millions of rands on unnecessary management and advisor fees, right? So this simple shift is critical if you want to retire 25 to 40% more wealth, because by saving that on those fees is going to have a tremendous impact on your ability to make your money work for you over an extended period of time, and that's what makes the difference, okay? And I want to play you this short little video from a very popular movie. A lot of you would have watched it. It's called The Wolf of Wall Street, and I'm just going to show you this 2-minute clip. And I think that it shares some really scary insights into how the industry works, right? Now, obviously, this is not a generalization, but it's something that I think people need to be more aware of, because this does happen, okay?
I gotta say, I'm incredibly excited to be a part of your firm. I mean, the clients you have are absolutely...
Fuck the clients. Your only responsibility is to put meat on the table. You got a girlfriend?
I'm married. I have a wife. Her name's Teresa. She cuts hair.
Congratulations.
Thank you.
Think about Teresa. Name of the game, move the money from your client's pocket into your pocket.
Right, but if you can make the clients money at the same time, it's advantageous to everyone, correct?
No. Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is gonna go up, down, sideways, or in fucking circles. Least of all stockbrokers, right? It's all a fugazi. You know what a fugazi is?
Fugazi, it's fake.
Yeah, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real. Right? All right? All right. Stay with me.
Mm-hmm.
We don't create shit. We don't build anything.
No.
So if you got a client who bought stock at 8 and it now sits at 16 and he's all fucking happy, he wants to cash in, liquidate, take his fucking money and run home, you don't let him do that.
Okay.
Because that would make it real.
Right.
No, what do? You get another brilliant idea, a special idea, another situation, another stock to reinvest his earnings and then some. And he will every single time, because they're fucking addicted. And then you just keep doing this again and again and again. Meanwhile, he thinks he's getting shit rich, which he is on paper. But you and me, the brokers, we're taking home cold hard cash via commission, motherfucker.
Right. That's incredible, sir. Can't tell you how excited I am.
You should be.
All right. Now, that scene should at least make you feel a little bit uneasy about completely relying on someone else for your financial future, right? And to look after your best interests. All right. So it's critical then to invest in your financial education. And this is our second shift, right? So we take accountability, we control the controllables, and we invest in our financial education. Now, I promised you in the beginning of the presentation that we were gonna look at your financial independence number. All right. So I'm going to give you the formula to creating or to calculating your own financial independence number. Okay. So you basically simply take your annual expenses, right? So you take your monthly expenses, multiply them by 12, you get your annual expenses. You divide this number by 4%. Okay. That'll give you a financial independence number today based on your current expenses. Like, i.e., if you were going to retire today, right, then that would be your financial independence number. And you would then see whether or not you have more money invested in your portfolio than your financial independence number. If not, you're not financially independent, okay? Then obviously if you're now maybe in your 20s or 30s or 40s, or even your 50s, and you're now wanting to forecast like what that financial independence number is going to be in 10, 20, or 30 years, you then obviously have to factor in your projected inflation. Okay, and this is where the second half of the equation comes in, where you've got to multiply that number, your current financial independence number, by 1 plus your projected average inflation rate to the power of the number of years that you're wanting to forecast into the future. Okay, so if we put some tangible numbers here, all right, let's assume that your monthly expenses are 20,000 Rand a month, so your annual expenses are 240,000. Let's assume inflation is at 5%. You're wanting to forecast 20 years into the future. So let's say you're 30 and you want to be financially free by 50. You're then looking at what that financial independence number is at 50. Okay. So you've got 240,000 divided by 4%, which is 6 million, multiplied by 1 plus 0.05 to the power of 20. Okay. That gives you a financial independence number of 15.9 million Rand. Okay. This is an incredibly important exercise for everyone to do, because what often happens is that it wakes you up to the fact that, my goodness, like that is more often than not, people are like, whoa, that's quite a big number. You know, my 1,000 Rand or 2,000 Rand a month I don't think it's going to get me there. And it's better to actually go through this and realize this early on while you have time to adjust and while you have time to actually make changes, rather than in your 50s or 60s, you know, when it's now time for you to start hanging up the boots and now you realize, my goodness, I don't have enough money to retire. So now you've got to work for another 5 or 10 years. Okay. So understanding this is a giant step towards achieving financial independence, because you now have a line in the sand. You now know what your ultimate financial goal is, what your ultimate financial number is. Okay. So I hope that this is really invaluable to you. And that this makes sense. So I really encourage every one of you to go and calculate what your financial independence number is to see whether or not you're on track. Okay. The next thing I want to ask you is what is your money story? Okay, right? What is your story about money? You know, this touches on the mindset component and what you believe. You know, whether or not you believe money is a positive and endearing thing that is easy to acquire, or whether it's a scarce resource that's difficult to acquire. All right. And it's important to understand that if you want to reverse engineer your results, right? So if you're not achieving the financial results that you want right now, you've got to then change your behaviors. Okay. In order to achieve sustainable change when it comes to a behavioral perspective, you've got to shift your beliefs. Right? Otherwise, if you're not shifting your beliefs, your behaviors eventually are going to be reflective of your beliefs. Right? Now, obviously, our beliefs are generally are sort of molded and they sort of are distilled in us through our conditioning. All right. So this is your childhood plays a big role in your belief system. Your parents' values, their principles, their understanding of money, the way that they perceive money, that is often projected onto kids. And so that is always the toughest thing for people that come from previously disadvantaged backgrounds or come from poor environments to break out of it, is because, you know, their perception of money is very ingrained in them. Okay. So one of the things you've got to be asking yourself, and you've got to be exercising self-awareness when it comes to this is, are your beliefs, are your beliefs of money positive and abundant, right? Are they empowering you to go out and accumulate wealth and grow your financial, your financial nest egg? Or are they possibly negative and limiting? Do you have some scarcity mindset characteristics? Like, do you find yourself saying things like, I'm not smart enough to be an investor, right? I'm not a financial person, right? This is not for me. I do what I do, and one of the things that I often say to people is, where people say, look, I'm not financial, like I don't really understand this stuff. I say, okay, cool. What do you do? No, I'm a doctor, or I'm an architect. I'm an attorney. I'm an accountant. I run my own business. I say, oh, okay, cool. Like that's cool. Were you born a doctor or a lawyer or an accountant or architect, or were those learned skills, right? And obviously that it's no different to investing, right? These are learned skills. No one is born an investor, okay? Although I believe all of us should be investors, right? If you're serious about financial independence, you need to be an investor. You can't be an innocent bystander hoping that someone else is going to sort it out for you, okay? It is too interwoven into our lifestyle to have it outsourced, right? And we have to continuously invest in our financial education, because this helps change your belief system, right? It's a phenomenal form of conditioning or reconditioning. If you do have these limiting beliefs, is to invest in financial education. Read financial books. If you guys haven't read Rich Dad Poor Dad, it's a great book. It's a very, very easy read. You don't have to be very financial to understand it, and it helps break down a lot of these limiting beliefs that a lot of people have. Okay, so invest in that. Invest your time in reading those types of books, reading articles. And honestly, the best form of financial education you can get is by just doing, right? Doing it, investing, right? Because at the end of the day, you're going to learn through those experiences. Now, obviously, what you want to do is you want to create a framework for yourself to be able to make decisions, and obviously ensure that if you make a bad decision, that it's got limited downside. Okay, and that's going to be the next shift we talk about in shift 3. Okay, so what happens if you don't invest in your financial education? What happens if you just carry on and you say, you know what, I'm too busy. I'm too busy running my business. I'm too busy, with 101 things that I've still got to do. I don't have time for this, right? So I'm not going to do it. Well, if you do that, you're going to compromise your ability to make good financial decisions. Okay, you're going to become disempowered and unable to take decisive action to grow your wealth. Right? Like, if you think about it, there's a brilliant saying that if you take all the choices that you make, right, that you've made, that is your life. Like, your life is a culmination of your choices. So if you're going to make a whole bunch of good choices, you're going to have a great life. If you're going to make a whole bunch of bad choices, you're going to have not such a great life, right? And the same thing applies to financial choices, the financial decisions you make, right? And so often when we don't have the financial foundation, and you don't have, a decent like a level of financial literacy, is that you sort of default to things like, well, if it's too good to be true, it probably is, so don't even look at it. And this is something I see so often, where people aren't able to actually evaluate opportunities because they don't have the financial literacy, and so they pass on amazing opportunities. Don't get me wrong, there are lots of things that are out there that are too good to be true, but if you don't know how to measure that, you don't know how to evaluate that, then you're just going to stick to the same old thing and get the same average results that the masses get. Okay, and this is why it's so key to invest in your financial education. And obviously, once again, like if you don't have a foundational understanding of how investments work and finance, then you become vulnerable to unscrupulous brokers. People who are just really there to sell you whatever it is that they're selling to make money, and you, once again, you're going to be easily influenced by those types of actors. Okay, so the third and final shift that I want to share with you today is the importance of adopting an investing framework. Okay, and to quote Mr. Warren Buffett himself, to invest successfully, one doesn't need a stratospheric IQ. What's needed is a sound intellectual framework for making decisions and the ability to keep emotions from corroding that framework. Okay, and that is the last part of that, to keep emotions from corroding that framework. the reason why most investors or traders, I'm refer to as traders, lose money is that because emotions get the better of them. All right. And this is why having a framework is so key to eliminate your emotions getting the better of you and you making bad financial decisions based on fear or greed. Okay. So I want to share one of my greatest lessons with you, where it was a couple of years ago, a group of friends and I started an investment company. Okay. There were 5 of us. We started investing together. And we got really a nice sort of blend of guys. We've got an accountant, we've got an attorney, we've got a software developer, we've got like a marketing specialist, and we've got an entrepreneur, myself. So we've got a really nice diverse skill set. We thought we were all going to have different perspectives. So let's all invest together, and we'll be able to leverage off each other's skills. So we were fortunate enough to get into Bitcoin in 2016, right? At the beginning of 2016, when Bitcoin was about 15,000 Rand a Bitcoin. We then obviously experienced the 2-year parabolic rise of Bitcoin and cryptocurrencies, where it went from 15,000 Rand to 300,000 Rand, okay? And during this time, you know, I got so consumed by this industry and by blockchain and, you know, all the exciting things that were coming from it and all the new projects that were coming out of it. And I thought, this is the new monetary standard. Like, this is where we're all shifting to. And I made a whole bunch of really, really bad financial decisions over that 2-year period. Now, I was being rewarded for it, right? In 2017 alone, my portfolio grew over 1,300%, okay? So you start to develop like a bit of a bulletproof type of perception of yourself. You think, you know, I can't make a bad call. And in hindsight, you know, when I look back, there were a whole lot of bad investing decisions that I made because I didn't have a framework. I was just following the hottest new asset. I thought this was it, and I started making big mistakes where, you know, I started disinvesting from other assets. So I essentially abandoned asset class diversification, and I just piled into this asset class. And I knew at an intellectual level, and I knew that conceptually that, you know, I shouldn't do that. But it's very difficult to now take money out of an asset that's providing you with, you know, let's say a 1,000% return in a year, to go and put it in a government bond that's going to pay you 8%. Okay. But this is where a framework is so key. And this is really where this, so obviously after 2017, those of you that are familiar with what happened in the industry, 2018 came along and the whole market crashed. Okay. And I obviously suffered a huge financial loss during that period of 2018, 2019. And I then embarked on a journey to now do as much research as I can, pull together some of the best investment strategies out there, and build my own framework to ensure that this would never happen to me again. Okay, and that's what I did. I pulled together what I call my 7 key investment strategies, and I've then fleshed that out into a program now that takes a dependent investor or anyone who's maybe a little bit unsure, that is sort of fumbling around in this space, who wants to go on this journey to create and manage their own portfolio, to be able to follow a simple step-by-step process and adopt this framework, adopt these key investing strategies, and to provide themselves with a model in which they can make decisions. Okay, so I'll share a little bit more on that in a bit, but I just want to highlight here what happens if you don't have a framework. Okay, well, you don't have a model to make financial decisions, right? So what tends to happen there is you tend to become very reactive to the market instead of being proactive. Okay, you become easily influenced, right, by the hottest new investment opportunities or like get rich quick schemes, right? Because you don't have context to what, you know, to what you need to be doing, what your strategy is, you might know, all right, my goal is to accumulate 50 million Rand. But if you don't, you know, have a clear framework on how you're going to achieve that, then it becomes very problematic, right? And ultimately what will happen is that you may essentially lack the investing strategies that you need to navigate uncertain times, particularly like now. You know, we're in the middle of COVID, and we've been going through this lockdown. This has been a huge amount of uncertainty in the market, and without a clear framework to sort of manage those emotions, then we fall very prone to making bad financial decisions. Okay, so what we've covered today is essentially why 95% of people retire without enough money. Okay, we've calculated your financial independence number, right? We've got that formula, so each of you should have been able to calculate that financial independence number. I hope that that's provided some amazing insight. At the very least, it should start getting you to ask better questions, right? If you feel like that number is quite significant, quite large, and you're thinking, sure, am I doing the right thing? Am I earning enough money? Do I need to shift into something else? It starts getting you to ask better questions. Okay. The importance of low investment fees. Okay. It's key, right? Fees are the one of the things that you really can control. You can't control whether the stock market goes up or down or sideways, but you can control what you pay in fees. Okay. So be diligent about that and look at low cost index funds and ETFs. Okay. Exchange traded funds. Paying yourself first. All right. Adopting a rigid savings rate. Right. We've highlighted why that is so important. And then we've looked at the money mindset. Like, what is your story of money? What are you telling yourself? What are you perpetuating in your life? Right? And if you're not living a life of abundance, then you need to go and start with the mindset, right? Because that is going to then drive your behaviors, which is then going to change your results. Okay. And then finally, the importance of investing framework. Okay. As I said, I've had firsthand experience on what it's like investing without a framework and being caught, making some bad decisions. And I think a lot of people are scared about making mistakes, investing and losing money, right? But this is really where a framework is so key, because it allows you to make mistakes, but it allows you to limit the downside of those mistakes if you have a solid framework that you can apply, right? And that's really what it's about. It's about limiting the downside when you do make those bad mistakes. Okay. So now you've got two choices. Right, so you can continue as usual, like the old way, as we said, right? You can continue to tell yourself that you're not a financial person, right? And you'll never allow yourself to become a euphoric investor, because you're not going to take charge of that component of your life. And I find this crazy. Like we spend our lives working for money, earning a living, right? Starting a business, growing a business to earn more money. But then we don't take the time to learn what to do with that money and how to make that money grow for us, right? I find it amazing that we do that. We'll literally get up and work for 40 years to earn money, and yet we don't find it important enough to learn how to manage it and what to do with it. Okay. So if you continue as is, you can simply leave your financial well-being to someone else and hope that they act in your best interest. All right, and you can continue to erode your portfolio with unnecessary management and advisor fees that will ultimately cost you between 25 and 40% of your wealth. So I really love this picture because I found it so appropriate for this point, is that you can continue as usual. You can go on the nice, easy path on the left. It's paved. It's obviously the road more traveled. Okay, it's got less obstacles, less things to trip you up, right? Or you can take the road on the right, the road less traveled, right? You want to be a part of the 5% of people that retire financially independent. You've got to do what 95% of people are not willing to do, all right? And yes, it's maybe bumpy along the way. You might trip and fall, but you've got to get up and you've got to learn from that experience. And that's really what the second choice is all about, right? And the change that you need to make is really to adopt a new way of investing. And this way will really, really dramatically change your financial trajectory, right? And the first thing you've got to do is take accountability for your financial future, right? It's really no one else's responsibility but yours, okay? You've got to make a decision to become a financial person. If you don't believe that you're a financial person, that's also a mindset thing, right? So if you don't believe that you are a financial person, then you need to make a decision to become a financial person and invest in your financial education. Right, you've got to make a decision to manage your own portfolio and to adopt an investing framework. Right? These are all within your control. We've got to control the controllables in this world. There's so many things that we worry about and fuss over, things that are beyond our control, that we stress ourselves out of. But this is something you can control. These are elements that you can control. Okay. And finally, you can make a decision. Now, this is a really tactical thing here. You can make a decision to commit to a compulsory savings rate. This is something you can do immediately. If you're not saving a minimum of 20% of your after-tax income, that's an immediate change that you can make. and you can start investing that into your portfolio. Okay. So for those of you that that want to make the shifts, like that you've listened to this information, you've had a whole bunch of epiphanies, and you've been like, you know what, you're right. Like this has opened your eyes to what's really happening out there, and you feel that you really want to make the necessary changes, right? You can simply adopt what we've spoken about. You can adopt some of the tactical things. But if you're really wanting to fast track your success, right, and you want to go through a step-by-step process that really makes creating and managing your portfolio an absolute breeze. And honestly, it takes less than 4 hours a year to do, right? Honestly. So for those of you that think, I don't really have the time, I'm not really financial, this program is for anyone at any stage of their investing level, right? At any stage of their investing journey, like can come on, learn these key strategies, adopt this framework, and completely simplify their lives. Okay, so this is the 9-step process that we take people through in the Euphoric Investor Program. Okay, we start with your financial why, which we touched on a little bit today. We dig into the wealth mindset and how to create a world of abundance. Right, it starts with a shift in your belief system. We then look at our key investing strategies. All right. We then look at the overall strategy layer, which is then consists of the financial and risk assessment, the asset class allocation, as well as the individual investment selection. Okay. Once you've taken these necessary 6 steps, you'll now have your portfolio template. You'll now know what you're going to invest into. All right. And this is where you can then invest and automate. And we actually take you through an implementation session in the workshop, where we actually show you exactly how to invest step by step on a platform that is super, super user friendly. So even if you're not, very technically well versed and you're a little bit concerned about having to use a new platform, I can honestly say it is super, super simple. Okay. And we've designed this program to be able to teach to someone who's 12 or 13 years old. Okay. So it really, we've simplified it, but it is, let me not sell it short in terms of the impact that it will have on your life, and the impact that it will have on your perception of investing, right? You will not believe that you did it any other way, okay? So if you are serious about taking that next step and you want to take accountability, you want to make the necessary shifts, you want to control the controllables, you want to invest in your financial education, and you want to adopt a framework, right, with industry best practices and industry best investing strategies, then this is going to be the fastest and most convenient way for you to do that. So what does this all entail? Right. So when you sign up for the Euphoric Investor Method, you're going to get access to the 3-hour online course. Now, this essentially is a compilation of step-by-step video lessons of the entire Euphoric Investor Method. So in this course, you're going to learn exactly how to calculate your financial independence number. You're going to know exactly what that is, so that ultimately you know exactly where you're wanting to go, what your ultimate financial goal is. All right. From there, you're going to then learn how to cultivate a wealth mindset and how to eradicate all of those limiting beliefs that you may have around money. Okay. From there, we then go on to step number 3, which is the key investing strategies. And this is where you'll learn the 7 key investing strategies to build a rock solid portfolio in any market. That concludes the foundational section of the program, which is then where we go on to the strategy section and the framework. Now here, you'll then cover the financial assessment, your asset class allocations, as well as your individual investment selection. Once you now have your portfolio template created, we'll then move on to the implementation section, which is where you'll learn exactly how to invest on a platform, how to automate your monthly contributions so that your portfolio runs on autopilot. It runs like clockwork. And then once a year, when it's time to review and rebalance, the framework then provides you with a model on how to actually go about reviewing your portfolio and how to rebalance it so that you can remove the emotions from that decision making. Okay. in addition to this, you're also going to get a framework and a template, right? So this is essentially a tool that we've developed to help you go through the entire process, step by step, input your current portfolio values, to go through your risk assessment. It shows you exactly how you can allocate your asset classes. It gives you guidelines on the individual investment selection, and we've got some videos showing you how to compare different investments as well, right? So this framework really makes the entire process so simple, and we've made it like this so that we can teach it to someone who's 13 or 14 years old. So if you're sitting there thinking, I'm not really financial, I'm not 100%, I don't know if it's going to work for me, trust me, it is incredibly simple to implement. And included in this tool, we've developed a forecasting table that will then project for you the next 20, 30, 40, 50, up to 60 years ahead based on your current investments, on your current contributions. So it's going to show you whether or not you're on track. And if you're not on track, you can then tweak a couple of things to see how that impacts the growth of your portfolio over the next 60 years. Okay, so this is an amazingly insightful tool that provides you with so much context as to whether or not you're on track to become financially independent. What you'll also then have is access to our weekly online Q&A group calls. Now, these calls happen every single week on Thursday at 4 o'clock, where you can log on and ask any questions that you may have regarding the program or regarding any sort of investments that you're currently looking at. So this is essentially a forum or a call where we then provide support to ensure that you're clear on exactly what you need to do, and that you actually take action, that you actually implement what you learn, because knowledge without action is fruitless. Okay, it doesn't help us if we know these things but we don't take the necessary action. All right, so these weekly calls are really there to help you along the way and to clarify anything that you may not understand. And then finally, you'll also get a 3-month subscription to our online closed paid for Facebook group. Now, this group is really it's a community of like-minded investors who are on the same journey as you, that are going through the process, and it's a great community to share ideas, to ask questions, and also we share a lot of curated investment content as well as bespoke investment opportunities to that community. So you'll essentially have 3-month subscription to that, so you can gauge whether or not that is something that you're extracting good value from, and if so, you can then continue that on the paid for version at a later stage. But this is going to provide you with great context, and it's a great way for you to continue your financial education, because in that there's going to be amazing content and really value adding stuff that we share in that program. So as you'll see, this comes to a total value of just over $1,000. But for those of you that have watched this webinar, that are now sitting here, we'd like to actually extend a really special offer to you for taking the time and investing in your financial education. We wanted to make this as affordable as possible, so that there's no reason that you don't take action, right? That there's no reason why you don't take control, take accountability for your financial well-being, and start learning how to structure and manage your own portfolio so that you can retire with 25 to 40% more wealth. Because at the end of the day, no one is going to care more for your money than you. And we say this a lot, and I mean, I truly believe that the statement is true, is that our lives are a culmination of our choices. If we're going to make good choices, we're going to have great lives. If we're going to make bad choices, that's going to be reflective in the lives that we live. So when it comes to making financial choices and financial decisions, it's imperative that we are making good financial decisions. And investing in your financial education is one of the most important things that you will ever do. So I really want to encourage you to take action today, to take this next step towards financial independence, to invest in yourself and your future. And I really look forward to engaging with you further. For those of you that sign up, I look forward to working with you on your portfolios throughout this program, and I really look forward to seeing the results that you're able to achieve throughout this program. I want to wish you all the best and have a marvelous, marvelous week ahead. Ciao for now.